a company forfeited 1000 shares of rupees 10 each, fully called up. That means the whole 10 rupees has been called by the company for non-payment of allotment money of rupees 4 per share and call money of rupees 1 per share. Right, students? That means 10 rupee was the issue price. Out of this, 4 rupees were for allotment and call was rupee 1. So that means rupees 5, that is the balance or the difference, was called at the time of application. Then the important point to note here is that these shares were issued on pro rata basis. That means they were issued on proportionate basis. Now students, by proportionate basis, we clearly mean that the shareholder had applied for shares more than 1000 that he was allotted, right? That means he had applied for certain number of shares and he was allotted 1000 shares on proportionate basis. So we would have to make the calculations as to how much amount of shares he had applied, how much money he had sent, and what was the amount that was to be adjusted at the time of allotment. Now, this pro rata was made to the group who had applied for 60,000 shares and were allotted 50,000. Now, it is clearly mentioned that he was a member of a group who had applied for 60,000 shares but were allotted 50,000 on pro rata basis. We have to generalize for forfeiture and we have to show the workings very clearly. Now students, the first step is to calculate the number of shares that he had applied for, right? So shares applied would be equal to total pro rata applications for this group, which was 60,000, divided by the number of shares that they were allotted. Multiply this by the shares that he had received. That means he was allotted 1000 shares. So on calculating, we get this value as 1200, and this represents the number of shares that he had applied for. That means this particular person had applied for 1200 shares and was allotted 1000 shares on proportionate basis. Now, the next step is to calculate money sent on application. This particular individual who had applied for 1200 share had sent us an application money of rupees 5 for 12,000 shares, that means 1200 shares, that means he had sent rupees 6,000. Money used or adjusted was 1000 into 5. 1000 being the number of shares we had allotted him, into 5 rupee is the money at the time of application. So we had adjusted 5,000 rupees. That means we had received an excess on his account to the extent of rupees 1000 at the time of application. Now, we have calculated this amount as 1000. Let us move ahead and calculate what was due from him at the time of allotment and how much amount he had paid. Students, the application money in this case was, the allotment money in this case was rupees 4. That means money due on allotment was rupees 4, that is allotment money, into the number of shares that were allotted to him, which were 1000. That means money due on allotment was 4000. This person or this fellow was supposed to pay us 4000 at the time of allotment. But out of this, we had already adjusted rupees 1000 that he had paid excess at the time of application. That means we were supposed to receive 3000 from him, which he has not paid. And this amount of 3000 that was supposed to be received from him at the time of allotment still stands as payable in his account, right? Besides this, this is not paid at allotment, and besides this, on first call, he was supposed to pay rupees 1. So first call not paid is rupee 1 into 1000 shares. That means he has not paid 1000 rupee on account of first call. So concluding part would be to make a journal entry for all these calculations. So the journal entry would appear as share capital account debited to share forfeited account or forfeiture account. We should mention the full name. To share allotment that he has not paid. To share first call. Again, the amount that was not received from him. Now the share capital would reflect the face value of shares. That would be 10 rupee into 1000 shares held by him, which is 10,000. Share forfeiture would reflect the amount that he has paid. Now students, remember, he had applied for 1200 shares and 5 rupee was paid by him. That means he had paid a total sum of 6,000. So share forfeiture will reflect this amount, 6,000. Share allotment, we had calculated that he was supposed to pay 3,000. So that will reflect 3,000 not received from him. And first call would reflect an amount of 1,000 not received from this particular shareholder. Now, the narration for this would be being 1,000 shares forfeited. And we can mention originally issued on pro rata basis. Right? This is for your own judgment. And remember, this journal entry would be in the proper format of journal. The remaining part for reissue of these shares would be same.